Really quick vid, hopefully. Today we closed at 39.46. Today I wanted to discuss some key things. So all of this right here. We'll just run through them right now. Most of it is pretty bare bone, and then the last segment has something to do with trying to predict the actual price movement moving forward up until Monday and Tuesday of next week, which is the 15th and the 16th. So here we go. Let's start off with those necklines that I was talking about in the last video. So I remember telling you guys that we did have 3 necklines to break that were prevalent from the May run-up. Now, a lot of people accidentally miscalled this move. I mentioned because of this time zone Fibonacci sequence that we're currently in is going to alter the way the fractal looks when it's stretched out. Let me go ahead and delete these lines real quick. So because of that, you have to look for the patterns within the brackets in order to make a valid thesis based off of the input that you have for your time zone Fibonacci. Now, with all the mumbo jumbo out the way, I'll just show you what it looked like when we broke the 3 necklines. We did a break, retrace, tested a neckline, and then a secondary break, came back down. No market catalyst, no earnings, no Elon Musk sell off, no AMC sell off, just, you know, straight strength pretty much. And then we came and broke this 3rd neckline, confirming that we were strong by closing a day candle way above it. And that neckline was stretching all the way from the all-time high of the previous all-time high. I'm sorry. We had a similar situation here. I called out last video. I said if we want to see strength moving forward into testing the final macro neckline, which is in the same scenario as the last one, where we moved off of the all-time high from the top right here into the neckline of this last little segment that we had before we showed strength. We would need to see a confirmed bounce off of this 2nd neckline that we formed once we came back down and tested it. And as you can see, picture perfect bounce. I circled this yesterday, and this is called a bullish engulfing candle. So how do you know it's bullish engulfing? And this is like it's probably the 2nd most bullish candle. I forgot. I think the first one is called a Marubosa. I don't want to get the name wrong, but this candle basically means that off of the oh shit, my bad. Off of the low of the day, your gap down was lower than the wick of your last bearish candle. I believe this is called the inverted hammer. Where you opened at though is okay. Here we go. Yeah, where you opened at is lower than the body of the red candle from the previous day, and then where you closed at was higher than the open of the red candle previous to it. So it engulfs it basically. That's why it's called bullish engulfing. Wicks aren't really too prevalent, but as long as it's coming from a downtrend and your previous candle was a bearish candle and you have your open and your close of the day encapsulating this bearish candle, then this is a signal and a sign that a reversal is in the cards, like I was saying yesterday. So then you look at this MACD line and what do you know? Just as the signal indicator was about to flip in order to create a bear signal, we confirmed this to be a valid move just based off of the bounce alone. And then on top of that, the MACD indicator and the signal line are starting to separate, which shows strength in the current move up that we're experiencing with this MACD. This is the day chart. Okay. Now that we're going to go through the 3-day chart. Ignore the time zones on this because the time zones get messed up when I change to the 3-day chart. But I just wanted to get this out the way real quick. So this candle is very neutral bullish. It also needs another day to manifest this so we can see what it truly is because these are 3-day candles. So this candle takes 3 days to manifest, right? It's not a complete candle yet, so we can't make a judgment based off of this. But this is neutral leaning bullish right now. Right now it's kind of looking like a goddamn, I'm trying to think of the name of it. It's not an evening star. It's not a doji yet, and that's why it's hard for me to make a conviction because I don't know what this candle is going to end up being. I mean, if we end up closing Friday tomorrow, like maybe around 39, 38-ish, then we would be leaning more towards like a doji. It all depends, but right now we're looking solid. This run up today really set us up for hopefully a MACD flip within the next week. As you can see that, you know, whenever I said this before, whenever the MACD line is in blue and the orange line in red, whenever that MACD line comes from up under it to gain control on top, that's a bullish signal. And we're on the 3-day chart. And I think I pointed this out in the last video, but the last time we had a complete flip of the 3-day MACD, you can explain the rest. Oh, same thing right here when the short squeeze had initiated. So yeah, I mean you could do your own conviction on this, but you know, you had your same double little fake out. MACD crosses upward, signal line crosses in, double fake out. And I feel like this last leg will really start to kick things off for us to be able to see all-time highs the week of the 22nd through the 26th. And I know the 25th is closed. Thank you for pointing that out for me, whoever was in the comment section who said that. All right, what's the other thing I wanted to talk about? Okay. I wanted to say this for your thesis before I get into the super technical piece that I've been working on. I might stutter a lot because I'm still working on it. But I wanted to talk about, like, you know, having an alternative bearish scenario. To me, for this play, it literally makes no sense. And you got to understand, like, the fundamentals behind this is a short squeeze. The reason people are holding shares is because they want to squeeze the price of the stock upward. Why? Because when you alter the supply and demand of an equity, right, and people need that supply in order to cover their losses, it's going to force the price upward regardless of volume, regardless. Like, the only reason why we're here is because of these little tactics that they use behind the scenes, to where they redirect the volume of all the people who have been buying into all of these fake shares. Because let's be real here, they don't exist anymore. Because if they did, you wouldn't see this pattern playing out perfectly. My theory is that, you know, institutions have derivatives of the underlying stock. You know, the most notable one being, you know, fucking with the options chains and strikes and all that stuff. Writing the options, collecting premiums off of it, and using that to supply other derivatives of the underlying to be able to force that price action and fucking flip-flop in between each other and create these load-up zones before they really let natural price action take its place. The reason why I say volume is not needed in a scenario like this is because the absence of volume itself is what creates the short squeeze. The volume comes in when the FOMO happens. Because think about it like this, right? You don't have to trade bread 10 times for it to be worth $20 if there's only 2 slices of bread left within a community of 30 people. You know what I mean? Like, if I'm holding on to 2 slices of bread, right, and 30 people want it, guess what's gonna naturally happen? It don't matter how many times the share gets traded back and forth. It's still only a set amount. Actually, let me take that back. It does matter how much is traded back and forth, right? Because that's what makes the price and the value of it go up. There you go. That's supply and demand. If the underlying is not being traded to its fullest capacity, and people are demanding the supply more, which is why it's called a short squeeze, because the shorts are the ones that are going to be supplying the volume once this thing kicks off. But right now, that's why you have these low volatility days, because it's not needed. It's not needed. They keep they're redirecting the natural price action. Okay, you've heard many times that these people have a different price. It's like that on purpose. That's why dark pools exist. That way institutions can get out of their positions without tanking the market. But this is what happens when you abuse things. So I hope that made sense. Like when people say you need volume to kick things off, no, you don't. You really don't. As you can see, we had a low volume 3-day candle from today. That was a bullish engulfing from yesterday, which was like 10 to 15 million more volume. I mean, the only confirmation that you get from volume is between intraday on breakouts, but that's about it. I mean, there's multiple instances where volume, doesn't tell the whole story. I mean, look at this. You had a bearish engulfing at the peak of this, and then you drop down into a downtrend on less volume. How does that make sense? That didn't show any confirmation of volume. So don't let people sway you into thinking, that in the macro sense there's a bearish scenario, because it's not. Because that's the whole meaning of this play. It's to knock out the bears. We're at $39. You know what I mean? The only way I see this failing is if the government were to step in, or people stopped holding their shares. So that's beyond me. Okay. So now that we got that out the way, now I wanted to get into the final piece, which was this fuckery. Okay. I would like to explain this as best as I possibly can. Going all the way back from about August 5th, we had an uptrend, and a downtrend, and an uptrend, and a downtrend that lasted until October 27th, right? So what I noticed, and we talk about fractals, what I noticed is that if you take a really close look here, I circled everything for you, but from the 27th to present day November 12th, we have a similar scenario playing out where you see the same levels being respected in terms of the fib and our peaks. Okay, I'm gonna run through this with you, right? So for this whole retracement upward from August 4th to September 14th, we had a double bottom right above this one retracement line. That's the start of our retracement. We had a breakout above the 0.618, same as here. So let me write this down so that way no one is confused. This is August 4th to October 27th. Okay. And then I tried to circle the boxes so that way you guys can follow along. October 27th to now. Okay. Oh shit. There we go. God damn it. All right. Boom. There we go. Okay. So you had your little run up, right? And then a breakdown below. Where was this? Until you reached back to this 0.618 to 0.65 golden fib pocket, right? You saw the same bounce, but here's the key difference in this, right? We are in a bull trend right now where we're respecting long-term trend lines. This is how I know that we are about to see some fireworks. This move was seen go back and check November 10th in the after hours. You're gonna see a huge wick, a huge spike. That's what happens when you suppress the natural volume of the stock. Okay, like that, the natural price action of the stock being suppressed. This whole move right here was seen in after hours. I swear. Go check November 10th, because I was sitting here wondering for November 10th. I was like, okay, right here on the September 30th, we retraced back down all the way to the 0.786. Why didn't we do the same here? And it's because we just did it in after hours. And remember how I say institutions are trading this thing back and forth. That's why you're seeing Wyckoff textbook perfect. There's many ways they could be doing this. You know what I'm saying? They have a lot of arsenal up their sleeve, but they're doing it. That's why we're seeing Wyckoff play out to a T. So that's speculation. So when I saw that, I'm like, okay, my theory with this is because you have institutions playing their hand the most in the movement of the stock concurrently, right? And majority of retail is not supplying the volume because we are holding. Therefore, the transactions that are affecting the outlook of the price the most is whatever hot potato game the institutions are playing up until this thing decides to rip you based off of natural price movement, right? So therefore, any move that comes in after hours and pre-market can be validated as retracements. If institutions are the only ones trading it, therefore the pre-market and after hour moves are valid. It would be different if you had two different entities of the same size who were supplying the volume. Retail, majority of them are not actively trading like this. They're just holding. So the volume that's being supplied is by institutions and potential shorts and options volatility as well, from what we know. So therefore that move was valid. Now where does that take us? Okay, so I'm gonna try to run through this as quick as I can. This run up coming from September 30th to October 18th ended with a top at the previous retracement 0.382. We did the same thing right here. If we were to take a run up from here to the 0.382, it will end up at around 41.5 as a top to this bull trend that we're in, right? Where does that take us? There's two scenarios to this. And one or the other is still good in my books. If we were to descend, my concern is descending to the 0.786 because people didn't see it play out on maybe some of their brokerage accounts. You might see, turnover starting to happen, or people who shake out of their positions. But that's what's supposed to happen, you know what I mean? If we were to retrace that low. However, judging by this, the problem with that move is this, right? And this is what I mean when macro takes over micro. Your mind's about to get blown. I said that we would enter a top previous to this that will put us in between the 0.382, okay, and the 0.236 of the last retracement value if we were to swing back up after a first test of below the 0.382. So it'll look something like this, basically. So we confirm bull trend. We would stay right under the 0.382. We will come back down. Either we retrace to this trend line, the 0.618 or the 0.786. This wouldn't really make any sense. I'm more so thinking this trend line or the 0.618 and a quick snapback, but that's just me. So I'm gonna go ahead and do this, safe to say. And then we would come back up, right? Now, where does that take us? If you were to peak, right? Oops. If you were to peak where we ended up last time with this value, for this value. Oh, fuck, I keep fucking up. This value, bro. If you were to create like this same sort of scenario, what will end up happening is that we would play out something to where we would come from the extension of this lower line. Oh, I drew it out. I'm stupid. We would come back up to the extension above this zero off of the fib extension from the low that we saw on November 10th. to our potential first top that's coming up, right? So we would come up, descend, come back up above, and be smack dab maybe around 42. I want to show you guys what this looks like. So top at the 0.382 of the past retracement right here. Okay. A descent down right above this market open bottom. Right. Confirm a bull trend as well. And then when you retrace back up, you're going to retrace higher. And with that being higher, your peak of this would be in between the 0.382 and the 0.236, right? So that means that we, at the end of this fractal, would see somewhere between 42.386, we would see somewhere in between this price. Now, what does that mean for us long term? I want you to remember this price, okay? There we go. I want you to remember this box. So what did I say? 41.5 to 43.5 ballpark. Watch this. Let me load it, please. It wants to do this bullshit now. That's crazy. Give me a second. Give me a second. What the fuck? Oh, now it wants to do it. All right. So remember those prices that I said, 41.5 to 43.5 ballpark. Bruh. Okay, I was about to say, bro. I'm losing the people here. $41.5 to 43.5. Remember that. What is this? Remember how I said we broke above and we tested the second neckline? Right? That was our first neckline. Tested it. Confirm. Second neckline. Sorry. There we go. Tested it. Confirm. Wait. Make sure I retraced that correctly. Off of the wicks. Okay. I drew it correct over here. I feel like that thing is wrong. Here we go. God damn it. Time squeeze. Time zone. Okay. 41.5 to 43.5. Okay. Let's go to the day chart. And what do you know? If this next move were to come, in my prediction, the week between the 15th and the 20th and the 22nd, 21st, 2019. So between the November 15th to November 19th, right? And we wanted to see a break of this neckline, right? Let me draw 43.5 to 41.5. That will put us right above the neckline for this last leg to play out. And you know what happens when we go right above this neckline. That's all I'm gonna say. Something like that. Hopefully that made sense. I was trying to figure it out at the end because the charting was so bad. The charting was off. But that ballpark range, you know, us touching the mid 40s, it's pretty essential for us to, you know, see the next leg of this move be super violent. And I feel like once we respect that last neckline, then it's pretty much off to the races. So I hope you guys enjoyed that video. Sorry that was so dragged out at the end, but if you guys want to scroll, more than welcome to. But appreciate you guys in the end anyways. So thank you.